This is the final warning. We are looking at 3 explosive triggers about to collide. And when they do, crypto prices will explode fast. All while the Fed is lining up cuts that could unleash trillions of dollars fresh liquidity into the market. And we know that on top of all of this, the SEC just rewrote the ETF rulebook, unlocking billions in Wall Street flows headed straight into crypto. And billion-dollar treasuries are piling into Solana, betting it will outpace every other chain. And most people, unfortunately, treat these as separate headlines, as if they have nothing to do with each other, and they're not. Together, they form a single convergence of fuse, already burning towards a historic breakout. But here's the thing, not every asset gets the benefit right away. A few projects already have a head start, and they could rally first. So today, I'll take you through who are these frontrunners, along with the other catalysts that could make the next few months the strongest stretch of the entire cycle. So if that sounds good to you, let's jump into today's video. All right, so let's start with the macro backdrop, because this is where the story begins. If you saw and kept up with the news yesterday, you would know the Fed has shifted into easing mode. Powell's latest statement used the language insurance cut, he said, pointing to slower job growth, more downside risk to employment, and inflation that still feels sticky. The message is clear. Growth is cooling. Tariffs are keeping prices higher than expected, and the labor market isn't as solid as it looked earlier in the year. Now, keep in mind the data the Fed uses, is typically at least 1 month outdated. That's why you have many thought leaders, including Chamath Palihapitiya from the All In podcast, saying that we should actually use AI. We should have AI integrate with the Fed or eventually replace the Fed. We don't know, separate conversation. But I'm sharing with you what's going on now, okay? Whether or not I agree in the data they're using, because I know many debate this as well, but that's where we are right now. Anyway, when the Fed cuts while markets are near all-time highs, as they are now, history shows the results are powerful. JP Morgan's data says those cuts have led to average 12-month gains of about 15% with a perfect track record. So this kind of a setup doesn't just stop panic. It pours fuel on the fire. And then we have the SEC. They just approved generic listing standards for crypto ETFs. That change means products no longer need a case-by-case scenario evaluation and approval. The last time generic standards came to ETFs, the pace of launches tripled. Bloomberg analysts are already calling for over 100 new crypto ETFs within the next 12 months. That's what we could be seeing. And of course, Grayscale has already stepped in with the first multi-asset ETP covering Bitcoin, Ethereum, XRP, Solana, and Cardano. So zooming out, as we always do, the setup is very clear. Fed liquidity is turning back on. Bitcoin supply is drying up. And ETFs are about to scale crypto access for all of Wall Street. This feels like the moment before a big store opens. You know how there's like the big opening and there's usually a line lined up outside, like on Black Friday? It seems like that moment. Everyone is lined up and just ready for the doors to open, because we've seen every time the Fed lines up cuts, liquidity starts flowing, and Bitcoin already has a supply squeeze in play. It doesn't take months for the move to show up. It only takes weeks. That's why I'm watching, and the data says the system is loading, but my gut says the ignition switch is already on. Now let's shift gears and zoom in on Bitcoin, because this is where the pressure really builds. On the surface, Bitcoin has already been called, okay, it's already been said, this is the worst bull market year ever by some analysts. Prices held up so far, but the wild swings that, where people were able to capitalize and make money on, depending if they were shorting or longing Bitcoin, that more or less disappeared. There have been some corrections, but all in all, volatility seems to have compressed. And it's had many retail Traders losing interest, which is probably for the best because they were just adding a layer of volatility on Bitcoin's journey and performance. Anyway, so while it may look a boring Bitcoin trajectory usually is the setup for an explosive Bitcoin. The supply data is screaming. Exchange balances are at a 7-year low. And every time supply tightens this much, it only takes a spark for prices to rip higher. It's simple economics. Less supply, more pressure. And technical signals are adding even more fuel to the setup. The weekly stochastic RSI just crossed bullish again. Historically, this signal has triggered average rallies 35% of the time. And we're in a green September, which has often led to multiple green months in a row. So if we add to this the fact that analysts are pointing out that this year's September does not carry the overvaluation risks that ripped up past cycles, well, it looks pretty bullish. And we can't forget about ETFs. Wall Street demand is growing every single week. Now, let's talk about the battle heating up between Solana and Ethereum. This one matters because capital is already choosing sides. Pantera Capital, for instance, just revealed that Solana is now their single largest holding, roughly $1.1 billion worth. Dan Morehead even said he believes Solana can outperform both Bitcoin and Ethereum going forward.
Our biggest position is Solana. We have 1.1 billion of Solana on our books. But, Solana is only 1/20th of the market cap of Bitcoin. So I think it can outperform over time. And I think it's our current opinion that it outperforms Ethereum.
When the oldest crypto fund makes this type of a call, the market pays attention. And you probably should too, because it's not just Pantera. Strategic treasuries are accumulating Solana at scale as well. There are now 6 entities holding over 1 million Solana each, with Forward Industries leading the pack at 6.8 million Solana, worth approximately $1.58 billion, purchased at an average price of $232 each. Forward is not just stopping there either. They just announced a $4 billion equity program to grow into a $50 billion plus permanent capital vehicle over the next 5 to 10 years. Their chairman, Kyle Samani, said they want to be the world's largest digital asset treasury, not just the largest Solana-based one. So that's conviction. And once again, it's something you want to pay attention to because, once again, you make your money by following in the footsteps of those who know more than you, in smart money's footsteps, because they have research teams, they dedicate their lives to this, they have degrees in like all these economics, they are plugged in. Okay, so if they're making these moves, that is definitely a signal that you should pay attention to. We also see institutional infrastructure is lining up behind Solana as well. Since March, more than 540,000 Solana future contracts have already started trading, worth over $222 billion, with record daily volumes in August. These are the tools Wall Street needs to size their bets. And the narrative is spreading. Altcoin Daily is already calling Solana versus Ethereum the battle to watch into 2026. Now, I would add Sui. Of course, if you know me, you would know I love Sui, and I feel it's the underdog that no one even sees coming with everything that they're building. But for today's video's purpose, we will stick to this conversation between Solana and Ethereum. And I am going to prepare a full deep dive on Sui, most likely Monday or Tuesday next week. Okay, so hang tight. Anyway, we know that Ethereum has history, developer mindshare, and brand dominance. But Solana has throughput, lower costs, and now $1 billion treasury plus institutional grade derivatives on its side.
How do you think about Ethereum versus Solana right now?
So they both,
in terms of the better bet.
yeah. So there's going to be a lot of important blockchains over time. Solana is the fastest, cheapest, most performant. And so it's actually had better performance than even Bitcoin over the last 4 years. And that's why we want to have access to normal investors to something that's not very well known, but actually has been outperforming.
Do you think that one, though, outperforms the other? They're used for different purposes. One, it's a winner take all. What's your thought?
No, it isn't. It's not like there's not a winner take all on the internet, right? We have lots of different internet companies. There will be lots of blockchains that are important. But our biggest position is Solana. We have 1.1 billion of Solana on our books.
But how many different protocols do you think long term? So yes, there's lots of companies, but there's not lots of protocols on the internet.
Great question. I think there's a single digit number of layer ones, things like Bitcoin, Ethereum, Solana, not thousands, but definitely not one.
Mm-hmm. And is there anything that you've seen come on the scene where you go, that technology is actually better?
Well, right now it's Solana. Our biggest position is Solana. We've had huge positions in Ethereum in the past. We used to be 100% Bitcoin. Something could come out tomorrow.
Is there anything out there though that's interesting to you? The reason I ask is I would hope that, Solana was created many years ago. Ethereum was created many years ago. Bitcoin was created many, many years ago.
Yeah.
I would like to think that technology and technologists have come up with better solutions since then.
Well, Solana could do, I think, 9 billion transactions a day, which is more than all capital markets combined. So
Right.
It's not obviously need the next thing past Solana.
So you think it just doesn't matter?
Yeah, and there might be other use cases, other like Ripple's going after Swift, Bitcoin's digital gold. There's several different major use cases, but Solana's very good at the performant blockchain.
Now, coming out of the base story, which was about what could happen, here's what just happened. The SEC opened the floodgates, as I was saying. Yesterday, September 17th, the SEC approved generic listing standards for crypto ETFs and ETPs. That means no more case-by-case battles, so to speak, evaluations per asset. So if coin meets the criteria that the SEC laid out, which essentially just is futures trading on a regulated exchange for at least 6 months and has sufficient market depth, well, now it qualifies automatically. So which assets are first in line? We already know about Bitcoin and Solana. Beyond that, though, the SEC's new rules cover Ethereum, XRP, Cardano, Litecoin, and Dogecoin, all of which already trade on regulated futures markets. And in names like Chainlink, Avalanche, and Polkadot, and you're looking at roughly 10 to 14 coins that now qualify for spot ETFs under the new framework. And as I was saying in my intro, Grayscale has wasted no time. They have jumped on it. Their digital large cap fund was approved immediately, giving investors exposure to Bitcoin, Ethereum, XRP, Solana, and Cardano all in one product. This marked the launch of the first multi-crypto ETF in US markets. We even hear analysts like Eric Balkunas are already stating and saying the pace of launches could triple, with more than 100 crypto ETFs likely to hit the market in the next 12 months. Matt Hugin even reminded everyone that when generic standards came to traditional ETFs in 2019, launches jumped from about 117 a year to more than 370 a year. And for Wall Street, this is the green light. Pension funds, insurance companies, and registered advisors finally have a standardized way to offer regulated exposure across multiple digital assets. Solana's team said it best. We are living through crypto history, they said. This isn't just about access, it's about validation. Ethereum, XRP, Cardano, Litecoin, Dogecoin, Chainlink, Avalanche, Polkadot, and others just moved into the same league as Bitcoin and Solana. They are ETF-ready assets with a path to institutional flows. So now that we know which assets are first in line for ETFs, as I mentioned, Bitcoin, Solana, Ethereum, XRP, Cardano, Litecoin, Dogecoin, Chainlink, Avalanche, and Polkadot, the next question is, who is going to buy them? Bank of America's September Fund Manager Survey tells us everything. 67% of managers said they have zero allocation. The average allocation across the board is just 0.4%. That means most of the biggest players in the world haven't even started. The runway ahead is massive. And at the same time, digital asset treasuries, which are public companies holding crypto as part of their balance sheet, purchased $25 billion worth in Q3 alone. That's not retail buying a few $100 on Coinbase. That's institutional scale treasury moves. And it's not just finance. Tech is joining too. Google, a $3 trillion giant, just partnered with Coinbase to integrate crypto payments into its AI platform. That's how mainstream adoption looks. Not a press release, but the biggest tech company in the world backing crypto into its products. And to top it all off, Miston Labs announced that Sui, a personal favorite, is a launch partner of Google's new agentic payments protocol, a standard that lets AI agents pay each other directly. That means every time AI systems need to send a microtransaction, okay, crypto rails will be the ones processing it, as is only right. So I'm so happy to hear this, especially since a leader in the space, in the crypto tech space, will be handling it. So if we put all these pieces together, Wall Street is opening the gates with ETFs. Then we have corporate treasuries buying in the billions and tech platforms wiring crypto into the future of AI. These are not hype cycles. These are structural flows that don't stop once they start. That's why I have said, and even said in my last video, my last collaboration with Altcoin Buzz's Camille, that I don't think we're going to see a Bitcoin bear market. I think we are very much so at the precipice of seeing an ongoing Bitcoin bull market. It may not look like past cycles, but with all the global adoption, I just don't see how it dies. There will be corrections along the way, but I don't see all of this momentum going away. So as we close out today's video, the key takeaways I want you to take is an understanding that we are very much so seeing the final warning signs, signals, sirens. We see liquidity is opening, ETFs flooding in, and billion-dollar treasuries reshaping which chains will lead the charge. For the first time, the rails are set for crypto to move from the edge of finance into its core. Volatility will keep shaking the headlines, so don't be alarmed by that. But the bigger picture is clear. The foundation for the next parabolic leg of the bull run are already in place. September 2005 will not just be another checkpoint in the cycle. It will be remembered as the month that mainstream gates open. So here is the question we're going to wrap up with that you need to ask yourself. When the triggers fire and crypto goes parabolic, will you be on the sidelines or will you be already in position and ready? So if today's video helped you connect the dots, understand where we're at in the macro market, what's going on the institutional level, then I simply ask you like the video, subscribe to my channel if you haven't, and share this video with a friend or family member that needs to know what's going on. Anyway, guys, I love you so much. Stay plugged in, and I'll catch you guys in my video tomorrow.